Okay folks, I'm going to do this video very quickly. I've got a little bit of flu, or quite a lot actually. I'm not feeling very good, but I said I'd do a video, so I'm going to do one anyway. It's going to be kind of rough and ready, but there we go. So let's go through it very quickly, and I think this will just give you a brief view of what's going on. So here's the monthly chart on natural gas. This is the NYMEX chart. What's interesting about this chart, it gives us a sort of longer term view, which is pretty cool, and we can have a look at the last number of months, and you know, since the beginning of the year we've just been going sideways. That's February, March, April, May. Those are the rollovers. There's one every month. What's interesting about May last month is that it's the first month with a higher high and a higher low, even though it's a doji spinning top sort of candle, a hesitation candle really. It's the only month after a pretty long time where we've actually closed with a higher high and a higher low. So let's put a bullish check into that checkbox and say at least something, it's slightly positive. Now just below us we've got the $2 level, and we've got this yellow zone below there into the support zone here. If I just zoom out on this chart, you can see that's the extreme level. And I actually put this chart up on Twitter a while back. This is the bonus buy zone. We very rarely get into that level, so any dips below $2 into this yellow zone will be good opportunities to buy natural gas. I'm not sure we'll get there though. We've got this feathering on the monthly chart over there. You can see when we get this sort of feathering with lots of wick candles, it tends to be a turning point. We've seen that over the last number of months at around about the $2 level. So whether we'll get into the bonus buy zone or not, I don't know. We're in the buy zone for sure though. And last month we did have a higher high and a higher low. Let's swing across to the weekly chart and see if there's any clue from there. And really, if you just look at the weekly chart, we've been going sideways. We know what our levels are. There's the $2 level leading into the bonus buy zone, and we've got these various support levels around us. We'll zoom into my broker's chart shortly to have a look at that in more detail. Above us we've got the $3 rejection zone, and I expect we'll probably trade between $2 and $3 for most of the rest of this year. And then eventually, when demand starts to pick up, probably into the autumn or winter period, around about December I suppose, we could then hope for a breakout above $3 into the $3.40, 50, 60 or 75 region, which is this pink zone here, and where the 200-week moving average actually travels beautifully along the top of that level. So it's quite an interesting target. We've got that definite target region, and the very top of that region is actually the 200 period moving average on the weekly chart. Okay, so that's the overall picture really, and I think the only takeaway really, apart from us going sideways between $2 and $3 at the moment, is that if we look at the monthly chart, we've got our bonus buy zone below us, below $2. We've got this feathering wick candle sort of support forming above $2, and we often see that when the market begins to turn in natural gas. And last month was the first month in a very long time where we had a higher high and a higher low, even though it's not a convincing bullish candle. And in fact, the body of last month's candle shows that we actually closed slightly lower than we opened. But we do have a higher high and a higher low on last month. Let's go across and have a look at my broker's chart. So this is my broker's chart, and I've got on here the 4-hour chart. And I just wanted to use the 4-hour chart to zoom in and look at what we've got in context of that overall picture, which I've just showed you on the monthly and the weekly charts. And I want you to take this within that context. It's really important to look at the broader picture. And really, I think this picture tells the whole story. We've got two channels here. We've got this longer term channel moving up from the $2 region to the high that we saw at around about $2.65. We've fallen back into these subsequent support levels, back down to the $2.15 level, which I said we'd probably hold against, being an important horizontal support level, and also this rising channel line. We did hold there and we moved up beautifully, and all we did was we moved up to the top of this shorter term channel and got rejected from there back down to the bottom of this shorter term channel. That's these purple lines. And again, sorry about the hoarse voice and the abrupt manner, but I'm trying to get this out to you despite me not feeling very well at all. I might take tomorrow off actually and just take a little rest. I think perhaps I've been working a bit too hard. Anyway, so we've got this grey zone here, which is the sort of support zone. We've fallen back down to the bottom of that. The bottom of that is at about $2.25. And it's also the bottom of this rising purple channel. So far so good really. The bulls don't have any cause for real concern just yet, unless we start to break down through $2.25, down through the bottom of this purple channel and this horizontal support zone. And then we'll be looking at somewhere, I suppose, around $2.20 or $2.19, which is this longer term channel. And then we've still got the $2.15 level below us. So we've got all sorts of support beneath us. We've got 3 different opportunities for this price to bounce and to rally back up again. And I expect that if we don't hold here on the open after this weekend, if we gap down, we've got support further below us. But if we do hold above there, we should rally up quite sharply back towards the top of this channel line, and then through these various resistance levels. You can pause this video to see where they are and why they're there. Just simple lines of support and resistance which denote areas of supply and demand. And eventually I think we'll get up towards this channel top, and then as time progresses we should get up to $3. Expect a rejection from $3 back down towards the top of this channel at least, and possibly slightly deeper back inside this rising channel, this broader longer term channel, and potentially testing some of these lines again, maybe this purple rising channel, maybe this red resistance level, which will then become support. It's a pretty key level. That's at about $2.65. But I suppose if we do bounce back up into $3, get rejection, we should hold above roughly $2.50 to $2.65, and then continue to oscillate within here, perhaps for the rest of this year. As I said, we may even get deeper retests back into some of these areas. I don't think we're going to get below $2.15 though, and if we do get below $2.15 and down below $2, then we'll have to allow for a dip into the bonus buy zone, which will be below $2 into this yellow area. Having said all of that, let me remind you of the shapes of these wicks on the monthly chart and that feathering. It's actually easier to see if you kind of zoom out, and you can see that sort of feathering pattern that we've got right now. And whenever that occurs, it often denotes a turning point. We see it at the top over here. We see it where we are right now. We saw it in 2020, and you'll see it on various other occasions. So I expect that we probably won't get below $2, and any dips down to $2.15 or $2 will be good buying opportunities. You can see this range that we're forming right now with $2 as the bottom. We haven't got to the top of this range, which is the $3 level, this green line here. So the open space is actually above us and not below us really. Below us we've got good support, but above us we've got some open space, some clear air, blue sky as they call it, up until about $3. And then beyond $3, if and when we eventually break up through there, we've got more blue sky or clear space until we get to the 3, 40, 50, 60 or 75 level. That's this pink band up here, and that may well be where natural gas stops moving up for quite some time. If you look at this longer term picture on the monthly chart, you can see that natural gas spends most of its time between this pink level and this yellow level, between say $3.65.70 and $2. That's where we'd expect most of the action to take place. And any breaks above $3.50, 60 or 75 should be considered less likely than more likely. I think it's as simple as that. So that's on the monthly chart. I think that's where we are now. And I don't think it's complicated. If you just really look at this picture, that tells a good story. And if we go to the 4-hour chart, let's see where we're trading right at this moment. That's also a pretty simple picture. We've got channel lines which are containing the price action and good support levels below us. We've got that feathering support right down near $2, and we've got this open space above us up to $3 once we get through this top channel line and through $2.65. I think that's it for today, folks. I'm going to go and take a Disprin and have a bit of a nap and perhaps watch some Netflix. So if you appreciate the fact I've done you a very grindy, hoarse-voiced video when I'm not feeling well on a Sunday afternoon, give the video a thumbs up. And if you enjoy this sort of content, why not consider subscribing to the channel? A fantastic trading week ahead. It's going to be a big week. We've got the CPI number coming out from the US. We've got the Fed interest rate decision. We've got the EU interest rate decision. We've got triple options expiry during this week. We've got Thursday's job number. We've got the Fed statement. We've got the European Central Bank statements to follow their interest rate announcement. So there's going to be a lot of thrashing around. I don't know which way the dollar's going to react. I suspect that we're going to see further dollar weakness, but there are bulls and bears very strongly voiced in both camps. And of course, any dramatic and sudden moves in the dollar are going to have an effect on the price of natural gas and every other commodity too. Take care.